Accounting revision. State the name of the book of original entry used to record credit purchasers, cash purchasers, credit sales, and cash sales. So the answer for the first question should be purchasers daybook or journal. Cash purchasers are entered in the cash book. Credit sales are entered in a sales daybook or journal, whereas cash sales are entered in the cash book. Differentiate between cash and trade discount. There are several ways that you can differentiate between these two. You may take the highlighted information to differentiate between trade discount and cash discount. The most commonly used method to encourage bulk buying on regular purchases are trade discount, whereas cash discount is to encourage a prompt or early payment. State the accounting equation. There are 3 different ways you can derive accounting equation. Assets equity equals assets minus liabilities, or assets equal equity plus liability. And the third one, liability equals assets take away equity. Now you may write one of these formulas for the first question. State the accounting equation. Assets equal equity plus liability. Now, keeping this in mind, to complete the following table for 3 marks. Assets equal liability plus equity, taking this formula in mind. So in order to find the asset, to add up 60,000 plus 20,000, which is 80,000. Now, the next part is to find the liabilities. Therefore, from assets, you deduct the equity. By doing that, you can find the amount of liability. So take your calculator. 150,000 take away 95,000 should give you 55,000. Thirdly, assets take away liabilities equals equity, which gives an answer of 62,000. State the effect on the accounting equation of a business when purchasing a motor vehicle on credit. Motor vehicle is a non-current asset, therefore it has an impact on assets. Assets increase, whereas it was bought on credit, therefore it's trade payable, which has an impact on liabilities, so liabilities also increase. So the answer should be the assets will increase and liabilities would also increase. What? Now, let's move on to the next question. It's on petty cash book. Sophia maintains a full set of accounting records, including a petty cash book, which has a float of 250. On 1st April 2024, the balance of the petty cash book was 190. On that day, the float was restored. State the double entry for the transaction of 1st April 2024. Float is 250. And the balance at the end of the month is 190, therefore Sophia has spent $60. This should be debited to the petty cash book and credited to the cash book. Therefore, account to be debited, petty cash book. Account to be credited, cash book, cash or back column. Next part of petty cash book question. On 1st April 2024, the balance on stationery expense or account was 60, which should be entered on the debit side as balance brought down in the ledger. During the month of April 2024, petty cash payments for stationery totaling 45. This also should be entered on the debit side, but the description should be petty cash book. So let's enter the information and balance off the ledger. So it's on April 1st, balance brought down, and the amount is 60. This is the opening balance of the stationery expense account. At the end of the month, April ends on 30th. Opposite accounts name petty cash book, and the amount was 45. Now let's balance off the stationery account. 60 plus 45 has a greater number on the debit side. So 105, nothing to be deducted, so 105 there. Balance carried down, 30th April, and then bring it to the opposite side. April, May 1st, balance brought down, 105.